Investors gearing up for Nvidia earnings tonight, of course. Best Dow name year to date. Little pressure in some early trading, although off of the morning lows. Trivariate Research founder and CEO Adam Parker's with us at Post 9, also a CNBC contributor. Great to have you in, AP.
Yeah,
big day, big day.
Here, yeah.
There's some, short interest, highest since June. I think Goldman's got a chart of expectations, maybe not as crazy bullish as they've been in recent quarters.
Yeah. Some of the IPOs that were amazing in June are starting to come out of them. I think people are expecting a ton of IPOs in the next couple of weeks too. So there's some positive activity. I think most institutional investors come back next week and they've got 2 or 3 industry conferences to go get some Q3 data points and see how we're progressing. So, after Nvidia tonight, I think it's a little bit of a slow fundamental news for the rest of the week here in August, and then we can focus on how Q3 is tracking next week.
You think seasonality in September holds firm? It's not great, really, from the beginning of the month.
Look, everybody I know who runs a lot of money wants to buy high-quality U.S. equities if they go down 10, 15% for the specter of productivity in 26 and 27. So unless something really rattles people, I don't think we're going to get a big September sell-off. It's obviously hard to make a one-month call, but the companies aren't really indicating that things are slowing very much, the ones that are reporting. Even the consumer stuff out today, generally pretty decent.
Retail's at a 52-week high.
I'm not saying a down 4 comp versus the down 5. For some businesses is that great, but I don't think things are falling off a cliff, and I think a lot of the tech companies are poised to put up pretty good numbers in the next 12, 18 months. So I'm directionally positive. I don't think we're going to get that scare in September that really causes a big sell-off. Absent some big change in policy or something else.
It strikes me that given where the market has come to, and once you get valuations here and people get, looking at concentration, the 2 elements of the incremental bull case are, well, the big money isn't fully in yet, right? There's still kind of neutral positioning among hedge funds or something. And 2, structurally, the biggest stocks in the index are under-owned. Because they always will be.
Right.
Because no active manager is going to say, I'm putting 8% in NVIDIA and 7% in Microsoft and all that. Is that enough?
I think the bull case is neither one of those things, but I don't disagree. You could have flows that are always...
I'm more saying that's the stated bull case.
I think it's this innocent until proven guilty thing that all of this hundreds of billions of dollars of AI investment is going to lead to some productivity gains for the big companies. We were always told it was a 3 to 4 year after the initial investment cycle. May 2023, less than 2.5 years ago, was the first upward revision from NVIDIA. We're going to see this in the end of 26 and into 27. And if you're bullish, you probably can't disprove me from that for a while. So I'm going to try, if I'm sitting there as a manager, I was looking at this the other day and it kind of blew my mind. 77% of the mega cap universe market cap is growth, 3% is value.
Yeah.
Okay, it used to be, and the other we call neither's a middle ground. It used to be kind of distributed. So if I'm a growth PM, what do? I want AI, semis, and compute, infrastructure and power, select software that wraps around it, some life science. Those themes are intact, and nothing you can tell me in September of 25 is going to deviate me from that path. So I got to make some judgment about share gain, margin expansion, the macro. But who cares what Fed person did or what? None of that's going to derail me from thinking that a lot of companies are going to be able to grow their revenue, not do net hiring, and benefit on the margin line. And I won't be bearish on U.S. equities if margins are going up.
So yield pressure doesn't exist in the face of any of that?
It does for the multiples of select securities, but you got to remember the S&P 500 is a superior asset class. Approximately 0 of the companies are going to go bankrupt. I know that's a little histrionic, but
they get booted from the index before they get booted.
And that's an important point. 6% or 30 of the 500 names on average get replaced every year. What do? Take out 30 bad companies, replace them with 30 better ones. So it's a managed up index, which is why it's hard to beat, right? Yeah. So I feel like the bull case is more, I can dream that margin expansion is somewhat probable because of this big AI infrastructure. And then the second part of that's probably that independent, not independent, I don't know, but if the Fed's going to be more accommodative, I don't know if I want to get negative on that either. We ran at ZERP for a decade and equities were good. You want to make a different bet if we're going to get more dovish.
Well, that's because inflation was non-existent.
Yeah. But I don't know if we have the demand profile we had. I think what's hard for us to know is during COVID we had super strong demand and factories were shut down. We're not going to have that crazy demand, right? Because we did the purchase payment protection program, whatever. How many P's there were?
PPP.
Yeah. So I feel like if we ran below 2% for a long time, we're fine. We can run a little above 2 and we can be fine. I'm just saying the bull case. Your point's, sure, there can be flows, and I agree. I think NVIDIA's been more of a retail than an institutional stock all around. To the positive for the retail community. But if I dream margins are going up because of AI, and I dream the Fed's going to directionally not be, a problem, good luck shorting U.S. equities.
Yeah,
that's the bull case.
Adam,